record. So let's get back to the GBP index, the pound index. Okay, so um, now once price comes into your demand or area of interest as marked, you'll be paying attention to the biggest or the last momentum candle that price brings into the demand. And then, though you can find buys down here, but then your buys are only going to hold if price is above the last momentum candle that brought price down, if price is above it. So if you put a line, let's say here, price hit it, and you can see that price comes up, hit that place, it doesn't close above, comes down, hit again, comes down, comes down, comes down, go, hit, and this time there was a close. Do you see that? Do you see this candle closed? Do you see that? Are you seeing that?
Yes.
So
Yes.
now this body close above this place is telling you that all the sellers that were very strong here have now been weakened. Yes,
Yes.
they're weak. Therefore, anything above this point, and this is where the PSR comes in. Anything above this point, buyers will take control above this point up. So once you see this happen from your demand and you see this happen, your buy entry is always above this place. So yes, you can take the entry as the price was going above. Yes, this is a daily time frame, so this candle could concern. As a matter of fact, you have to even wait, or you can even wait for this daily candle to close above for like a better confirmation or a better kind of for a kind of a safer trade. And then once this bullish candle closes, sometimes price will come to retest a lot like right away. Sometimes it will not. It will keep just going up, and you feel like it has left you. It has not left you. Price will always utilize that area before it makes the big move. Don't feel like the price has left you. Okay, if price does not use it, no matter how higher it goes, it will come back to it one day. Okay, that's what I like about PSRs. Okay, so price goes above, comes back to retest. This one, you can see this bearish candle close above this line up here. But then the next candle picks up, moves up. Then the next one started coming down, hit it, tried to go above it, it rejects. The next one came below, everything rejected. And then the next one, boom, open, moved up. The next bearish candle came down, stopped. And you can see that at this point, consistently, price is now trying to stay above this line, and price doesn't make any effort to come close to staying below here. I hope you can see that. You can see this candle came all the way down, but it rejected with a very big, okay, no, this is not a wick. This is a line that I put here. Yes. So from this point on, you can see doesn't. Price doesn't. So when you see this happening, you see there is a close above, there is a rate test of that place, price above. Even if you don't get the entry at this point here, and price is still moving up, you can still jump in the trade or find an entry. Why will you do that? Because price is above the PSR, or price is above the point where the sellers got weakened. Price is above there. And therefore, the concept is that As long as price is above there, it will continue to go up. So in this type of trade, wherever you take profit is on you. You are taking the trade, so you know where you want to take profit. We are only looking at the demand and what will help you to take an entry for now. But in terms of taking profit, yes, you can take profit when you see the profit is enough for you, or you can be taking profit when you see if you look at the next area where there is reactions or sellers can be, or next demand zone, sorry, next supply zone. Okay, because you can see here price was going up, 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 up. What is the last? So this move stopped at the top here. So the last bullish candle was here at the top here. The last bullish candle before price started selling, it sold here. It went up to here, and there was another bullish candle also here. I hope you are seeing that.
Yes.
Good, good. So that is around the area where you would want to take profit. Okay, because you know that at every supply zone is likely there will be a reaction. Okay, so you want to take profit either there, or as long as you are in profit and you are satisfied, you don't need to let your trade get to that place, because you cannot force it to get there. It can decide not to go there and come back and stop you out. Okay, so but then for our lesson today, we are trying to learn how we were able to get the main demand zone here from the 3 month, 1 month, and how we waited for price to come there on the weekly, and we refined it to the weekly. We waited for price to come there on the daily time frame, and what we used to determine that we are now going to take the entry by using the last bearish candle that closed big, and looking at price going above and staying above that to take our entry. So every situation could look different, but if you get an ideal situation where you can do something like this, that I think is going to help. So you must make sure price is inside that demand or area of interest from the higher time frame. And then you must make sure you see something like this. Then you can be sure to take your trade. But um, the other example we also looked at from BTC USD that has not worked out. We can see a demand zone that we marked here. We can see price comes to tap into it from the weekly time frame. Yes, we could find buys down here because of this area, because of this rejection. But then it's always better to sometimes wait for the price to give you that extra confirmation before you take your trade. So we could see that price comes up, and this time on BTC, it fails to close above the last bearish candle that closed before the reaction started happening. So once we couldn't get a weekly close above here, and a drop and a push and a rate test, and price staying above this place, if price is staying here and it does not come to the yellow line, then we know that at least we can get a buy up to the next area where we have another supply. Does that make sense? Does that,
Yes.
okay, good. But because we didn't get that, this trade has not played out, which means if you were looking to buy, it wasn't able to close above here. But all is not lost. Why am I saying that? No matter how low price goes, what do you think will happen when in the future price comes up and now closes above the yellow line?
It will buy
In
massively.
this same area of sellers, price closes above there on the weekly.
It will
That will
buy.
mean we'll wait for price to either retest, whether how long it will retest, we don't know, but price will drop. As it goes above and stays above that point, is our buy entry to the next area of supply. Are you getting the point?
Yes.
So, though it did not work here, there was no confirmation. It doesn't mean the setup is over. It just means it's going to take a long time or some more time for it to happen. So you can be waiting for this level to buy above it, at least to the next level where there is a supply up here. So what is the supply? The last bullish candle before a bearish move. So that is typically like an order block or something like that. But it can be an order block including a fair value gap. It depends on the time frame you're using. Okay. So this is it. Do you have any question regarding what we've been discussing so far about demand?
At least so far so good. I've been able to capture the demand. So,
Perfect.
and the supply, you said is likewise
Yes.
to the this thing. So we'll have to go because with this demand now, it is easy to even analyze this on a trendy market. If we are going to enter a trendy market, we can
Definitely.
easily
It's easy. Demand is easy for trending market. Yes, demand is easy. If the market is trending, getting demand is easy. You can see, yeah, demand is easy. The price moved up here. Yeah, you can see this. Okay, this is an order block, but from here, price boom moved up. But okay, so let's not complicate it. I think let's just leave it where we left it. So, what else did I
support
want to
and
add?
resistance.
Yes, so in terms of resistance, for resistance and support, resistance and support is not exactly as demand and supply, but they are closely related. So demand is closer to the support and resistance is closer to the supply. So for instance, on a weekly, on the, let's say 1 month time frame, again on the pound index, okay, where you identified as your you identified this area as your demand. And then we have been studying why price came here and bought. Now, the low of this place, which is the last point that price touched before giving you that demand, okay, before creating that demand, that point is the support. So, in other words, all the external higher point and lower point on the chart is your support and
Before,
resistance.
please, can I ask,
Yes, ask.
please, before we can call a particular area a support, how many times we market touch that area? Will
Yes,
it be
so
just that once or
yes, so for me, I am going to say that, okay, so what I would tell you right now is what you should do is look for that touch or a point where the market touched. And these days, I call it reaction. The market reacted from. So the market went up, it came down, went up, came down and touched here and moved up. Okay. So that touch, so let me put this point here. And don't put that place as a zone. Always use either a smaller zone or a line for that resistance support. That works best. Don't use that as a zone like the demand and the supply. Okay, I like to use it. That's why I've refined it to be a PSR. I like it to refine it to make it a very tight area or line of price.
Okay.
So look exactly at the exact place where the price touched before making the reaction. Okay. The moment you see that place, put your line or mark that. Well, there are two arguments. So, for example, this is the monthly time frame. Let me go to the line chart. So, and the line chart is very, very, very helpful for you to identify your support and resistance. So, when I go to the line chart, where does the line chart take me? It pushes me. I put it here on the candles, but the line chart takes me up a little bit to this point. This is the point where the touch happened. So for now, I prefer to use the line chart instead of the
The
candles
zone market.
when I'm looking for my support and resistance. So I
Okay.
want to push this one a little bit up to here because I want to use where I saw a touch,
Okay.
where I see the last touch before price made a bigger move. So here too, I can say here, down here, this is where it make this touch here and then move up. Okay, touch, touch. Okay, so I want to use here, this down here, the first touch here, and I want to use this touch here, and I want to use this touch here. Okay, I can also
Okay.
decide to use this touch here, like this first one. So price hit here, pushed up and stopped here, came back down, stopped here again, came back down, went above here, dropped down. So let me use the first touch, this first touch rather. So your
Okay.
question was, how many touches should we have before we call it
Yes.
a strong support resistance? From the little I can say, it's better to have like 2 or 3 touches. Okay, because how are you going to know this place is a strong point where price is going to react? You will not know until price have come there again, and then it has given you a reaction. Okay, I hope you understand what I'm saying.
Yes, I'm with you.
Good.
I'm with you.
So until price comes there, so now you've seen that price touches this point and it goes up. Okay, when price now comes there again, what let's watch what it's going to do. So price comes close to that place. It didn't really touch it on the line chart, but then it moves up. What does this mean? It means that buyers are active, if not exactly at this point, at this zone closer to this area. Does that make sense?
Yes.
Which means it's still that area. So buyers are there. And that means the point where the first touch happened can be called a stronger place, a stronger point. Now, when you are waiting again, you have to wait and see in the future when price got there, was there another reaction there? Okay, so you have to always wait to see that there is a reaction before you can now know that, okay, this place is still active or is still strong for buyers. So I would say that when you see the second touch and at most the third touch of a particular place, you can now mark that place down that, okay, this place looks like it is going to be working. But that doesn't mean that you should place a buy limit there
No.
and then be waiting. The market can sweep it and push down and stop you.
Exactly.
Yeah, but then what you do is anytime price get to that exact point, you want to see if there is a reaction like rejection or engulfing handle happening.
Yeah, in that engulfing all these what is it called? Morningstar,
Perfect.
divergence and the like.
Good. So those are the things that are going to tell you that okay, truly, that place is still holding. But what I have refined this concept to be is that I will use the line chart to identify the point like I'm doing now. Why am I using the line chart? The line chart gives us the open and close point of that particular time frame you are using. Okay? So if you have problem identifying the exact point using the candlesticks chart, you can use the line chart and that will give you a precise point. Okay. So let me, like I've put the lines here. Let me go back to the candles on the monthly time frame. So when I go back to the candles, you would realize that if I put it down here, this will be like wicks on the monthly. But then where it is right now is exactly, yes, someone can argue that we can still also put it here at this point because the open of this candle open here came down and rejected and went up and closed exactly at this point. Hit up a little bit and closed. The next bullish candle opened exactly here and boom to the upside. This is the thing, this is what I'm looking for in the market. Where exactly price opened and then whether
Close.
this one made a wick or not, you could see that the full flesh of the candle started moving from exactly this point. You can see where this blue line is the open. You can see where this bigger candle, you can see here, this point is a very important point. So if you're looking at a place where you place your line as a support or resistance, these are the points. And the line chart is going to give you exactly that. Okay. So this is where the line chart point is. And see exactly where when price now retraced or came down. Once it hit this line, let me make this line a blue line. Please pay attention to what I'm showing you, and that is going to change things for you.
Yes.
Exactly that price hit it, there was a push to the upside, a small rejection. But the concept here is that because this point was the point where buyers took off with price, as long as price will come back and hit that place and does not, the word is, and does not give a body close below this blue line, you can enter buy. So you see how different this is from the demand supply concept we're using.
Yes.
This is different. This one, I'm not waiting for price to close above the last daily candle or anything. I have a certain line or point, and I want to always be buying above that point. So this is the monthly time frame. Let's go to uh daily.
Okay, daily.
Let's watch exactly that blue line, that line. Okay. So all you are doing is you are waiting for price to hit exactly this point and you enter buy. Okay. Now, so price was coming down. Now, so this candle was the last bearish candle that closed. The last big as price was coming down first. This candle came down, boom. There was a small body close below our support, which is the line. By using the line chart, there was a small close, body close. Is it the red candle, small body that dipped into it? So you want to wait for this. Now the next candle opened exactly here made a wick, pushed down, then everything started rejecting. Are you seeing that? Now,
Yes.
the moment everything started rejecting, as price was going above the blue line, let me make it red this time so that it will be clear. As price was going above the red line, it's your buying click. Boom, 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 buy. Why am I saying that? You want to be buying above the red line.
The red line.
But how are you going to be sure that the buy is going to hold? The last open of the bearish candle that brought price down before this bullish candle was rejected and was going up, as long as price is going to close above that last bearish candle, you can hold the buys you took. Does that
Very
make,
strong.
does that make sense?
Yes.
Perfect. So
Means it
you
already
can see,
broke structure.
yes, you can see all these things that we are saying. We are talking about a higher time frame. So, which means that once you are waiting
Yes.
for price to get to your PSR or your support, you mark the last bearish candles high or open. Then price get to your support, and you know this is your system. You'll be buying as price stays above the PSR, which is the red line. But then you would want price to close above the last bearish candles open or high before you can be comfortable to hold, which means your internal TP or TP1 for this buy you are taking is exactly the blue line. If it doesn't
Yes.
close, we don't get a body close above it, price can still come down and test the red line, which is the PSR. And the moment price closes like strongly below it here, you cannot hold the buys.
That means we want to sell.
Yes, that means it's not like it's going to sell. It's giving you an intention to sell. It might come down, come down, come down, and still move up. So if it keeps pushing down, 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 fine, that's okay. Down. It will always come and utilize this point before it's finally pushed down, or it will come close
Okay.
to it. And the
So if
moment,
it closes below
yeah,
the red line,
mhm.
we can sell immediately.
No, you cannot sell immediately because it can close below the blue red line. The meaning of that is price is giving you an initiation or initiative or intention or indication that I want to sell below this red line. That's the meaning of that. Why does price have to close below here like this? And and that means I want to sell below that red line because already above this red line here, price took off with momentum, boom, bullish momentum. Therefore, a close below the red line, which is here, means that that bullish momentum that happened from here has been weakened, has become weak.
Uh,
So, but anytime that momentum, um, this happens, there is something we call pullback or correction. Price will always want to correct. But the concept about support resistance or PSR is that if price now closes below here and it comes up and hits here and stays below here, below the red line, like this, doesn't go above it, is your sell. You keep finding sells. But the moment price comes and closes below the red line, goes below, does its own thing as long as it can, and closes above the red line again
line. Yeah.
and comes down, go above, come down, go above, and stays above the red line. As long as it will stay above the red line, price is going to buy. So
Okay.
what is the PSR helping us to do? PSR is giving us a point to be buying and selling. That's it.
Okay.
You want to be buying above the PSR
Yes, sir.
and selling below the PSR. That's it.
Sir.
Simple. Simple. So sometimes it can be very difficult. You can do some try and errors. And that's also because when a daily time frame is pushing down, you might think that the daily time frame now is giving you a bearish move, like a bearish close below the PSR. So it is stopping you out. Then you go out. On the weekly time frame, that whole move can reject. And now price will go above the red PSR again and start buying from the weekly time frame perspective. So you need to be going in between the time frames to be still monitoring your PSR. Okay, but at least at a point you are going to stick to a particular higher time frame that is going to resonate with your strategy, what type of trader you are. Okay, so the PSR is giving us that guide that okay, this is the point where we can buy from or we can sell from. That's it. So you take your buy and that's it. Now, how do we know this red line is fully qualified to be a PSR? Okay, we will know
Yes, sir.
only when price has used it as a support, which here we have seen it has become a support here because buyers took price up here and price came there and bought again. So it's serving as a support here at this point. You need price to utilize it as a resistance in the future. That is the only way
Okay.
this point it qualifies to become a PSR, like a stronger PSR. If price doesn't utilize this point as a resistance, this red line, is just like a key level, but it's like a level, but it's not, let's say, a major or key. Okay, and I cannot qualify that as a PSR, precision support resistance, because I want a point that has been used for both support and resistance. And that's exactly where I'll be safe to be taking my entries from. So if Precious is here, Precious, your problem is about entries. And if the meeting closes, I still can have time to do one session so that I can explain to you the other people who have questions. Mary, Esther, and Patience, I can be able to get through your own. Yeah. But I hope, though we are using Ben's queries, I hope all of you are learning things. So now let's watch. Do you see how price now goes below the PSR in the future and comes, see exactly where it touches? Boom, boom. So the concept is as long as it doesn't go above this red line, sell. Do you see the precision here?
Yes.
That's it. So master this, and that's it. Trading can at least the stress can reduce. Just
Yes.
master this. Okay. Identify a PSR. So when I see that this point is being used as support, and in the future, price has used it as resistance to sell, that's it for me. This is the point I'm going to be buying and selling on this chart. So as long as price is below this point, I'm going to keep selling. So price hit here, it sells. It comes back, but it doesn't go above it. I have no point buying. I still look for sales. It doesn't even get close to it. But so here or I'm selling. Okay. I just once price comes close to it. So now you have a PSR guiding you, but you can now use the supply concept maybe as at this point, okay? Because price get to here, you see a drop down, comes back to here, and then a drop. What does this tell you? So price is at a major PSR, but it comes close to it, hit this point down, hit here and down. What does this mean? It means that sellers are here. Price hit here, down, hit here, down. As long as price is below this point, sellers will take charge. And the same as the red line above here. Okay. So now what we can do is to do this. But the question now is, what do you think will happen if in the future price now gives a close above here?